Donald Trump's America First crusade has begun, with the trade tariffs as his main weapon, while his promises and threat on this matter far outweigh actual decisions. Both have one effect: the strengthening of the US dollar. The threat of a global trade war increases demand for the dollar as a safe haven asset. At the same time, Trump's actions are driving up inflation, which will make it harder for the Fed Reserve to cut interest rates. However, economic factors might force some adjustments to policy. You're watching Traders Canada on February 13. In the US trade standoff with the rest of the world, Australian and Japanese currencies might actually strengthen. When Trump imposed the 25% tariffs on steel and aluminum imports, the Australian dollar rose alongside commodity prices. Meanwhile, the Japanese yen has its own unique story. Japan is largely exempt from Trump's trade war, making the yen an attractive safe haven asset. More importantly, the Bank of Japan is prepared to raise interest rates, maintaining a hawkish stance while most central banks are cutting rates. Thus, Japan's Producer Price Index report on February 13 could boost the yen as the prices are expected to rise from 3.8% to 4%. On Thursday, Germany and the United States will release their inflation reports. For Germany, the Eurozone's largest economy, consumer inflation is expected to decline to 2.3% in January. Preliminary data was already released in late January, and the final figures are issued in the middle of February. Since markets have already factored in a drop from 2.6% to 2.3%, the confirmation of this trend could lead to a rise in volatility or moderate decline in the euro against the US dollar. The euro might avoid another drop if the pound sterling steps in the full support. The UK economy is the sixth largest in the world and second in Europe. In the fourth quarter, the country's GDP is expected to rise from 0.9% to 1%. And this is still far from the US GDP at around 2.5%, but it's still the growth. A positive result could push the British pound higher, potentially pulling the euro up as well. The UK's industrial production is also expected to improve. According to forecast, in December, the indicator may increase from -1.8% to +0.9%, which could also support European currencies against the greenback. If the Eurozone economy also shows signs of an improvement, the euro and the pound sterling could climb even higher. Year over year, Eurozone industrial production may expand by 0.3%. Given that this indicator has been negative for 18 months since May 2023, a switch to a positive reading could be a strong bullish signal for the euro. Despite some optimism for the euro, Trump's trade war continues to boost the dollar. US tariffs are pressuring other economies while making the dollar more attractive against the basket of 6 major currencies. US producer price inflation accelerated by 0.7% in the fourth quarter. In January, the indicator is expected to increase by another 0.1% to 3.4%, further supporting the US dollar. Core PPI, excluding food and energy, is expected to remain stable at 3.5%. However, since the Fed Reserve's target is just 2%, persistent inflation will keep the Fed hawkish, strengthening the dollar. The Fed Reserve's mandate includes both inflation control and employment stability. That's why markets closely watch the non-farm payroll reports. The January non-farm payroll report showed a sharp decline in the new jobs from 307,000 to 143,000. That's why weekly jobless claims could attract more attention. If the numbers drop, it will confirm labor market strength, thus boosting the greenback. Several central bank officials will speak throughout the day. Market volatility often follows monetary policy comments as they signal potential rate changes. The ECB Economic Bulletin will also be released, and this report provides economic and financial insights that influence monetary policy decisions. It's published 8 times a year, 2 weeks after each ECB rate meeting. Please note that the time of publications is set in GMT +3 The next video review of traders calendar will be released on February 13, and we wish you profitable trading and see you soon.